Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I hope that you guys have a good, restful result day break. Very good morning, this is Kelvin here. Today will be Tuesday, the 13th of May, 2025. So as usual, before we kickstart today's Daily Dose of Market Insights, which is very significant based on the price movement that has taken shape yesterday, let's have a quick look at the disclaimer first. Okay, give me a minute. Hopefully the screen is moving. All right, good. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, let's have a quick recap what has taken shape yesterday in terms of the significant news flow, data release, economic data release, pardon me, and as well as their significant spillover impact on those broad-based cross asset classes. So yesterday's data is more, I would say not data, I would say news flow is more pertaining to US-China trade truce or this 90-day of trade pause where tariffs will be lowered by these two countries. So what do I mean by that? So if you look at yesterday, we have this news stating that US and China has decided to slash tariffs during a 90-day of reprieve to actually set up a mechanism for future trade negotiation or compromisation. So overall, what the end result over here was US reducing its China product levies from 145% to 30%, and China will drop its US product duties from 125% to 10%. Okay, so both countries is actually back to where it was initially before the start of that additional tiering tariff introduced by Trump. Talk about the reciprocal tariff. So now everybody has a base tariff of 30%, and US also hit by 30% from China. So this okay, China hit by 30%. Do not forget, before at the start of this year, there was an additional 20% tariffs that was actually introduced by US President Trump on China before the 2nd of April Liberation Day. So the net result over here was because of this reduction in tariffs was greater than expected, because over the weekend Trump actually teases that, saying that China tariffs will be reduced to around 80%, but it actually dropped more than 80%. It dropped to 30%, and with that China also responded more optimistically by reducing US tariffs or US products tariffs heading into China from 125% to 10%. So the net result was a mega risk on scenario yesterday, where all the major US stock indices rallied, and 3 of them managed to clear above their 200-day moving average, which is the SPX, the Nasdaq, and the Dow Jones Industrial Average. So the SPX gained by 3.26%, and the one that is more sensitive to risk on risk off behavior, I call it the higher beta US stock index, which is the Nasdaq 100, being heavily weighted by mega cap technology stocks, actually outperformed the best yesterday, up by 4%. The Dow Jones up by 2.81%, and the Russell 2000 up by 3.42%. And the Nasdaq 100 has being the higher beta stock indices, yesterday has already entered into a bull market territory by clearing above the 200%, and it rose from its April low of 25%. So what do I mean by this? So if you look at the chart of the Nasdaq 100, right? So the Nasdaq 100 from its 7th of April low all the way up to yesterday's closing price, okay, it actually rose by 26%. Okay, you can see here 26%. So we know that from a definition of a bull market, anything that is 20% or more, and most importantly, it cleared also above the 200-day moving average, signifying that the Nasdaq 100 has or indicating that the Nasdaq 100 has entered into a new bull market, which got to respect yesterday's bullish price action. All right, so very similar price action as well on the S&P 500. So the S&P 500 also cleared above the 20-day, 200-day moving average as well. If you were to do the price action from the low or 7 April low all the way up to the high, okay, this one is only 20%, right? Haven't above 20% yet, but soon to be. And the Dow Jones Industrial Average, which is lagging behind, okay, managed to have a daily close above the 200-day moving average, but not as a higher magnitude as compared to the S&P 500 and the Dow Jones Industrial Average. So from the low of 7th of April low all the way up to the yesterday's close, which is Monday's close, 12th of May close, is at 16%. All right, so the net result overall is what we got to see over here is that the higher beta Nasdaq 100, which is leading the fort, has already entered into a bull market. So very likely it will have also a positive spillover impact on the rest of other major US stock indices as well, igniting at least a medium-term bullish trend on the major US stock indices that we're talking about, from a multi-week to a multi-month, as this 90-day so-called trade tension reprieve takes hold. So after 90 days later, market will actually now be market later will be there thereafter paying attention to, is there any potential breakthrough that the US and China negotiation can able to actually negotiate a possible trade deal. And bearing in mind over here is that Trump also did mention yesterday, if the after 90 days there's no potential breakthrough, the tariffs on China could actually go up again, but it will be lesser than the 145% that has been hit, okay, currently. All right, over here at this point in time. And although Trump did mention that over here yesterday that even China also agreed to roll back non-tariff barriers, but this was not being mentioned in their official press statement yesterday. So what is non-tariff barriers is, that means i.e. Chinese rare earth exports to US, and as well as US corporation doing business in China may not be able to, will face will what we call it, will not be able will be less likely to face sanction risk from China, because don't forget at the start of this year there's this China also imposed non-tariff barriers on US. That means product sanction heading to US, and US company doing business in China will have a tough time, right? Especially companies that are related to AI as well, AI and the higher tech US related company. And most important is the Chinese rare earth export heading into US also faces several restriction as well, because this rare earth is required for EV making and as well as semiconductor chips making. So Trump claimed that China yesterday agreed to roll back non-tariff barriers, but however, this was not being addressed in this official press release yesterday. All right, okay, at this point in time. So because it's actually a closed door discussion over here, because of this another positive remark made by Trump yesterday that also causes another we call it reinforce the mega risk on rally that is being seen on the major US stock indices yesterday. And what we could see over here is that we know that the US dollar has been moving in line, in direct correlation with the movement of the major US stock indices. So given that the major US stock indices, all of them have a very strong risk on behavior yesterday, that also have a positive spillover impact on the US dollar as well. So the US dollar rallied across the board, and the one that is especially against the safe haven currency like the yen and the Swiss franc over here. So based on the 5-day rolling performance basis, now they back down a little bit, a dollar yen. So I'm speaking right now, they're up by 3.3%. the dollar is up against the Kiwi by 2.45% and up against the dollar Swiss by 2.19%, whereas the dollar is actually underperforming against the CNH because the CNH is able to actually not face the strength of the US dollar. Is also due to what I call there is still some kind of a demand for Hong Kong and China related shares after that so-called trade truce that is being announced yesterday by US and Chinese officials. So that actually also benefited the CNH indirectly also caused by the positive movement that is being seen yesterday on the Hong Kong stocks and the China stocks. So that actually explained to us why the dollar CNH doesn't rally that much, and in fact it just go flattish. So right now it's in fact trading almost at the unchanged mark based on the dollar is actually almost unchanged against the CNH based on this 5-day rolling performance of the dollar against the major currency as we are speaking right now, 13th of May. And if you look at the price action of the US dollar index that is being used to measure this either a general strength or general weakness in the US dollar, has also a spike up as well today. And yesterday rally is the most we call it it's up by 1.35%, and its daily rally is the most since November last year. All right. So, but what's interesting over here is that it spiked up and it now hit the 50-day moving average, I think, as a resistance at 101.92. So later when I shared with you guys on the short-term intraday technical outlook on the major dollar pair, we start to see some signs of dollar weakness on the intraday basis as represented by the various major respective major dollar pair momentum indicator. I'll touch more about that in greater detail. And what we could see over here as well is that gold prices also plummeted over here. So if you look at gold price, let me open up the chart of gold. Okay, so if you look at the daily chart of gold, it actually smacked all the way down, right, by recording a negative 2.79% over here. So this negative yesterday's low of 2.72% is one of the worst daily return that is being seen, I think, almost a year or so, because previously the worst return so far was in April this year, about a month ago, that is negative 2.46%. So yesterday's drop of negative 2.7% over here is actually the worst return almost seen in November last year, right? So that is so in line with the strength of the US dollar. So the US dollar gain yesterday, the intraday gain yesterday was the best since November last year, and that led to a worse daily we call it performance on the gold yesterday, which is down by 2.7%, and it's the worst performance since late November last year, and it also broke below the 20-day moving average. And what's interestingly, right now is actually back down to retest the low on 1st of May previously, where the price action rallied and attempt to retest the current all-time high area of 22nd of April. So what we could see over here is that overall the longer term trend for gold still remains intact. What we could see over here, the longer term trend of gold still remains intact over here. So what we could see is that potentially in the near term there could be some kind of downside pressure still persistence, given the fact that the major US stock indices is in a bullish territory right now, and we know that gold price in the last 2 months or so has been rallying on this stagflation fear on the US economy, and that actually causes the US stock indices to collapse as well because of number one, the very kind of aggressive trade tariffs policy that US White House administration is advocating. And given that there's this potential breakthrough between US and China trade tension, de-escalation of this 90-day trade truce between these two countries, in the medium term or in the short term and the medium term, gold could potentially face downside pressure. So in the next step, we'll be looking very closely the 50-day moving average, I think, as a support level at around the 3,125, and as well as the lower limit of this major ascending channel for the low of 13th of 30th of December. So later I'll touch on more on the short-term intraday technical outlook on gold, what are the key levels to watch, and the trend bias for today. And also because of this very strong risk on rally, so yesterday we also see a very strong push up in West Texas crude oil. So West Texas crude oil, before we went for our Visa day break, we were bullish on last Friday, and the price actually hit our resistance. And what's interesting is that we start to see the bulls are getting exhausted yesterday by forming a bearish shooting star candlestick right below the 50-day moving average, acting as a resistance at around 65.40. So what we could see over here is that potentially yesterday's bounce in West Texas crude oil is more like a corrective rebound in a medium-term downtrend phase. And do not forget over here is that in the next few months, OPEC Plus is still going to actually increase more production height within OPEC, so that could potentially also increase the supply of oil. So with that, that could also offset the positive optimism that is being triggered on yesterday by this US-China de-escalation. Right, and now another news flow I want to share with you over here is pertaining to, yes, we now start to see US and China trade de-escalation, but US and the rest of the world, the whole world is watching, especially against the with her major trading partners, we also the key developed nation in the world, such as Japan. So over here in Japan, yesterday's the Japan Prime Minister, after the conclusion of 2 rounds of trade negotiation talks between US and Japan, the Japan Prime Minister made a speech in the Japanese Parliament yesterday, saying that Japan will accept a trade agreement with the US that exclude an accord on autos. That means what Japan wants over here is that they wants Japanese cars to actually have zero tariff heading into US, because Japanese cars is also one of the key exports of Japan, not even US and globally over here. So Japan will continue to seek reprieve from all US tariff measures and hope to reach some manner of agreement in June. All right, and also autos are being a key sectors for the Japanese economy. That means cars, which is already under pressure. And at this point in time, Japan also stated that she won't sacrifice its agriculture market to protect autos over here. That means it seems to be in a big hard sticking ground for that negotiation between US and Japan to be successful. Don't forget, what US wants is also wants to actually export its agriculture product like beef into other countries, where previously UK and US managed to strike a deal because UK allow the exports of US beef heading into the UK agriculture sector. But it seems to me that Japan stated, based on the Prime Minister speech to Parliament yesterday, they seems to have the hard stance that they are still wanting to protect the Japanese local agriculture market. So that's not a kind of a rather rosy situation between US and China, US and Japan, pardon me, any potential kind of trade de-escalation between these two countries. And also yesterday, Trump also did mention that saying that the European Union is much nastier than China. So it seems to me that the next punching bag may come from EU right now, since that we have now that 90 days truce that has already been brokered between US and Chinese officials yesterday. So Trump mentioned in his kind of a public press conference, stating that the European Union is in many ways nastier than China over here. So what it means that it seems to us that market participants right now be watching any signs of breakthrough between US and European Union's trade negotiator in the coming weeks and coming months over here. And with yesterday's risk on rally that's been seen in the major US stock indices, i.e. we know that the stock market is a barometer for the real economy, with such rally clearing above the 200-day moving average on the Nasdaq 100, the Dow Jones, the S&P, the stagflation risk has been reduced in the US, and with that, we start to see not stagflation rate, the recession risk has been reduced in the US. Market participants are now also looking at a no interest rate cut potentially in the next meeting in June, 18th of June, with a high odds of 88% over here. So previously, a day before, and a week before, market is looking at a 72% chance that the Fed will maintain it at a 4.25% to 4.5%. And yesterday's after the optimism that's been triggered by US-China de-escalation, the odds has increased by 88%. So 80% chance market participants in the Fed funds futures market are expecting the Fed to stand pat again on the next meeting, which is 18th of June. And if you look at the aggregated probability, still mentioned that previously when I showed you guys this CME aggregated Fed watch tool, where we are able to see what is the probability that market expectation has on the amount of cuts, hike, or stamp pad done by the Fed this year, and also stretching into next year as well. So based on the current probability right now, according to the latest pricing, we call it modeled by the Fed CME Fed Watch 2 in the Fed Funds futures market. Market participant now looking at the next potential cut will only come in September, no longer even July. July is about 50% coin toss. Okay, 44% chance, 45% chance that the market expecting is a cut to 4%, but 55% chance the market expecting no cut at 4.25%, and the higher odds of 89% will only come in the September meeting over here. And after the September meeting, potentially the Fed could either cut in this October or December. So overall right now, based on the aggregated probability as modeled by the CME Fed Watch 2, by the end of the year, which is 10th of December 2025 FOMC meeting, market participants has a chance, a rather higher odds of 71% that the Fed funds rate will be at 3.75%. So what does it imply? That the market is now looking at only a chance of 2 potential interest rate cut of 25 basis point each. All right, that means a total of 50 basis point cut, but if you get 4.25% minus 3.75%. All right, so that gives you a 50 basis point cut in total. So that has already moved in line with the latest dot plot that was released in March earlier, where US Federal Reserve officials are expecting only 2 interest rate cut this year due to a heightened risk of slower growth, and their hands are tied because of heightened risk of sticky inflation. So the next dot plot will be released on the June meeting, 18th of June meeting. So market participants will then adjust the expectation again according to the latest dot plot then in next month. All right, 18th of June. All right. So with that sum up the the first segment of today's daily dose. So let me now touch on the second segment, which is the intraday technical outlook on the various broad-based cross asset classes. So with that, let me expand my screen so that you guys could have a better view of the charts. So let's start with the FX market first. So that I mentioned over here is that the dollar index has really hit a 50-day moving average, I think, as a resistance after yesterday's swift rally at 101.92. So let's take a look at the euro dollar. So the euro dollar, what you could see over here is that on last Friday, we also do have a we call it a, pardon me, we also do have a bearish bias on last Friday, and it really hit our support level at the 1.110 level and slash 110.50, which is also the 50-day moving average, I think, as a support level as well. And what's interesting over here is that the hourly RSI has hit the oversold level and it starts to flash out a bullish divergence over here, where price action show lower low, but the RSI shipping a higher low. So what it means that yesterday's swift down move is a bit overextended to the downside. So potentially on the intraday basis, there could be some kind of bounces taking shape today during the start of the European session, since it's coming since it hit exactly at the 50-day moving average, I think, as a support, and also as well as this dotted pink line here, which is the former long-term circular descending channel resistance, previously from January 2008 high, now turns into a significant pullback support as well at around the 110.50 level. So with that, we will flip to a intraday bullish bias for today for a potential minor recovery or minor bounce to take shape. So first resistance level to watch will be 112 figure level. Above 112 figure level may potentially seize the next intermediate resistance zone to come in at 112.80 slash 1330, which is the 20-day moving average, acting as a resistance level, and as well as the minor descending trend line that is still in place since 22nd of April swing high. However, if price action starts to plunge down further with an hourly close below 110.50, then today's intraday bullish trend bias for that minor bounce recovery scenario will be invalidated to see another round of impulsive downward sequence unfolding, exposing the next intermediate resistance, exposing the next intermediate support zone at 1.0940/1.0890. Below it, may see the key 200-day moving average coming in, coinciding with the next graphical support at 1.0780, which is the minor swing low area of 31st of March and 2nd of April. So i.e., given the positive observation at key support area right now at the 50-day moving average and the former long-term circular descending channel resistance from January 2008 high, coupled with a bullish divergence that's being seen on the hourly RSI, will flip to a intraday trend bullish bias for a potential minor recovery scenario for the euro dollar using 110.50 as my short-term pivotal support level. Next up will be the sterling dollar. So the sterling dollar also came down and hit our support level. Still recall that on last Friday, we do have a bearish bias below 133 figure level. Price action, which is the 20-day moving average. So and it's all coming very close to the 50-day MA acting as a support at around the 130.65 level as well. So I'll be using the 130.65 as my short-term pivotal support level for today. We'll flip to an intraday trend bullish bias for a potential minor bounce scenario that may unfold. First resistance level to watch will be the 20-day moving average, and as well as yesterday's test of it before that sell-off took shape in the start of the European session at 133 figure level. Only a breakout above 133 figure level may see a much more substantial recovery to revisit or retest 134.20. However, if price action starts to plummet down again below 130.65, that would an hourly close below it, that would invalidate today's intraday trend bullish bias and kickstart another round of impulsive down move sequence, exposing 1.2940. Below it may see 1.2855 coming in next, which is the 200-day moving average acting as a next support level, and 1.2940 is rather key because it's the lower boundary of this ongoing medium-term ascending channel, pardon me, support that is in place since 13th of January 2025 this year. Right, so that's for the sterling dollar, watching the 130.65 short-term pivotal support for today's potential intraday trend bullish bias for that minor rebound recovery scenario. Next up will be the Aussie dollar over here. So Aussie dollar, let me take a look at the weekly chart of the Aussie dollar. So the Aussie dollar, we know that the post-election, we see a push up on the Aussie dollar. Then thereafter, we start to see the dollar strength coming back into play as well. And that also impact the Aussie dollar on the downside as well. So we could see is that 2 days of bearish rejection of the key 200-day moving average. All right, so we see 2 days of bearish reaction of the key moving average, and what we could see very importantly over here is that the price action has starts to reintegrate back below the dotted gray line, which is the former major ascending trend line from 13 October 2022 low, and now acting as a significant pullback resistance level as well, where price action did a bit of whipsaw around 5th of May all the way down to yesterday's Asia session. Right, so there was a two retests and got rejected at the key 200-day moving average. So at least in the short term, it seems to tell us that the bulls has been destroyed. More likely, the bullish tone has been destroyed due to the bearish rejection of this key technical element, which is the 200-day moving average, and as well as the former major ascending trend line from 13 October 2022 low. Now, with that on the hourly time frame chart, so what I do over here is that still last Friday we were neutral. So with that bearish observation on the hour on a weekly time frame, we will now flip to a intraday trend bearish bias over here using this 60, okay, give me the 200-day moving average, so 64.65. Okay, I don't put it so tight over here. So This is 64.35. So I use a slightly higher, which is the 200-day moving average, 64.65. So that will be my short term. Whoops. Setting. Okay. Oops. All right. So that will be my short term pivotal resistance level for today on the Aussie dollar 64.65. So as long as 64.65 didn't surpass, which is the 200-day moving average as well, I think as a key resistance level, we'll flip to a intraday trend bearish bias. Next near-term support level to watch will be 63.30, which is the 50-day moving average. I think as a support level, I think as a near-term support level, a breakdown below it exposes the next graphical support at 62.40, which is the congestion area of 31st of March and 3rd of April. However, if price action starts to have another round of whipsaw movement and cleared above 64.65, then we start to see another round of choppy movement on the upside to retest 65.15 and even 65.20/65.50 may come in next. All right, so using 64.65 and the 200-day moving average, that will be my short-term pivotal resistance for the Aussie dollar, and we will flip to a intraday trend bearish bias for today. Next up will be the dollar yen over here. So the dollar yen, what we could see over here is that it hit a resistance level graphically, which is this former minor swing low of 31st of March, and the hourly RSI, okay, has also got rejected at a resistance level as well at around the 79.4 level. All right, so this is a rather stubborn resistance on the RSI. Every time we hit this level, there is actually a pullback, a minor pullback. Similar over here in 2nd of May, there's a pullback, but this is a steeper pullback. And over here on the 9th of May, there's a minor pullback. So net overall, there seems to be a potential chance of a minor pullback every time the RSI got rejected at the 79.4 level since 23rd of April this year. So given that bearish observation on the intraday basis that's being depicted on the dollar yen, so what we could see over here means that yesterday's short move up is getting a bit overextended. So there could be a risk of a minor pullback scenario taking shape before another round of a bullish leg starts to emerge on the dollar yen, given the fact that the dollar yen also now move in a direct correlation with the price action on the major US stock indices. So given that since we still have a risk on scenario to take shape, that could have a positive feedback loop on the dollar yen. But we know that price action don't go vertical up or vertical down, they oscillate within some trends. So now potentially there could be a start of a minor pullback to take shape first before the dollar yen starts to surge higher potentially. So using 14870 as my short-term pivotal resistance level on the dollar yen, we will have an intraday trend bearish bias for a minor pullback scenario to unfold. Two near-term support level to watch: 147, a breakdown below 147 may see a retest at the 50-day moving average, and also the minor swing high area of 9th of March, 9th of May and 12th of May now also turns into a significant near-term pullback support at 14620 over here. However, if price action starts to see a breakthrough again and a bullish breakout and hourly close above 14870, then the impulsive upmove sequence may resume, exposing the next near-term resistance level at 14990/15030, which will correspond closely to the 200-day moving average. All right, so that sum up the intraday technical outlook on the major dollar FX pair. Now, moving on, next will be the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33 rallied as expected and almost hit the 23,740. So this was yesterday's Asia session. At the opening, it went all the way up to a high of 23,705 before shaping that pullback in the entire Asia session yesterday and heading into today's Asia session as well. So with that, right now we'll be using a rather tight short-term pivotal support level. This is based on yesterday's gap up. All right, yesterday gap up during the Asia session at the start. As they gap up, thereafter it rallied and hit the 23,740. So as long as the 22,000 tighten, 22,970 tighten short-term pivotal support holds, will still maintain that intraday trend bullish bias on the Hong Kong 33, representing the Hang Seng Index. After 23,740, the next resistance level to watch will be 23,970, 24,040. We also correspond to the upper limit of this minor ascending channel from the low of 16th of April, and also close to the 1.236 Fibo extension from the low of 9th of April, and also the minor congestion area of 20th of March and 24th of March. However, if price action starts to have an hourly close at the breakdown below 22,970, today's intraday bullish trend bias will be invalidated to see the minor pullback extended, to see the minor pullback extended towards the next near-term support level at 22,680 and even 22,380 next. So that's for the Hong Kong 33. Next up will be the Nikkei 225. So the Nikkei 225 rally as expected, and right now is coming close to a pivotal resistance level, and also the hourly RSI starts to break down from a parallel ascent trend line support level as well. All right, over here. Okay, so right now I could see there's a resistance level here, former minor swing high, former swing high, minor swing high, former swing high, minor swing high area of 21st of February, right, and close to a Fibo extension zone of 1.236 and 1.382, and so the upper limit of this minor ascending channel that I drew from the low of 10th of April. So with that, with the bearish breakdown of this parallel ascending trend line that was being drawn from the low of 8th of May. So what it means, it seems to tell us that this bearish observation on the hourly RSI indicating that yesterday's upside momentum has started to get dissipated, and that could face a risk of at least a minor pullback or setback scenario that may unfold on the Japan 225 after yesterday's swift movement. So with that, we will use 38,850 as my short-term pivotal resistance level. We'll flip to an intraday trend bearish bias today for a potential minor pullback or setback scenario to unfold. First support level to watch will be 37,870, which corresponds to the 200-day moving average as well. A breakdown below 37,870 may see the minor pullback scenario extended to the downside towards the next near-term support level at 37,280, which also correspond to the minor ascending channel lower boundary or support area drawn from the low of 10th of April. Only an hourly close and a push up above 38,850 that would invalidate today's intraday trend bearish bias to kickstart another round of impulsive upmove sequence, exposing the next near-term resistance level at 39,480, and above it may see 40,460 next, which is the 1.68 Fibo extension drawn from the low of this 7th of April over here, and as well as the minor swing high area of 27th of December last year and 24th of January this year. Okay, so that's for the Japan 225. Using 38,850 short-term pivotal resistance, we'll flip to an intraday trend bearish bias for a minor potential pullback or setback scenario that may unfold. Next up will be the Germany 30. So the Germany 30 rallied and hit our resistance level, which is this over here, the new resistance level defined by a Fibo extension cluster level after the current all-time high area at around the 23,460 level. So it will hit the resistance level that we highlighted on last Friday, where we have a bullish bias 23,920 before it shaped a minor pullback yesterday, due to the fact that there was this negative news flow coming up between US and US and EU, because Trump mentioned that EU is much nastier than China in this ongoing trade tension between these two nations. So, but however, price action managed to stall right exactly at the minor ascending channel support drawn from the low of 11th of April over here, and the price action on the RSI still managed to held above this parallel ascending trend line. So with that, we will use yesterday's bullish hammer low, which is 23,380, which is also this minor congestion area here of 7th of May and 8th of May. So using a Titan short-term pivotal support level 23,380, we will still maintain that intraday trend bullish bias above 23,920 may expose the next intermediate resistance area at 24,170 / 24,190 based on a Fibo extension clustering level zone as well. However, a price action breakdown and hourly close below with an hourly close below 23,380, that would invalidate today's intraday trend bullish bias to kickstart a minor setback or minor pullback scenario, exposing the next near-term support area at 23,070. Below it may see 22,685 coming in next. So that's for the Germany 30. Next up will be the major US stock indices, the US Wall Street 30. So US Wall Street 30 now hit the 200-day moving average, and what you could see over here is that the hourly RSI has started to trace out a bearish divergence, all right, over here, indicating that upside momentum may have started to slow down after yesterday's swift and rapid move on the intraday basis. So given this bearish divergence that's being seen on the hourly RSI, there could be some signs of sideways movement that may take shape on the US Wall Street 30 for today. So with that, we'll flip to a neutrality stance between 42,480 and 41,770 for the US Wall Street 30. A breakdown below 41,770 that could open up scope for a minor pullback scenario to unfold after yesterday's swift movement to revisit or retest the next near-term support level at 41,135. We also correspond to the 50-day moving average, I think, as a similar support level as well, similar support area as well. So that's for the US Wall Street 30. Next up will be the Nasdaq 100. So Nasdaq 100 managed to clear above a much more clear, significant bullish price behavior above the 200-day moving average over here. So what we could see is now starts to evolve in a steepened minor ascending channel from the low of 22nd of April over here. So what I could see is that there could be some sign of minor pullback taking shape, given that the RSI has shaped a bearish divergence as well over here. Okay, but given the fact that it has cleared very clearly above the 200-day moving average, so potentially after that minor pullback, another round of bullish price action may continue to unfold on the Nasdaq 100. So with that, I'll be using the 20,390 as my short-term pivotal support level, and we will flip to a intraday trend bullish bias for the Nasdaq 100. Next near-term resistance level to watch 21,055, followed by 21,400 next, which is a 1.236 Fibo extension taken from the low of 22nd of April, and as well corresponding to the high of the minor ascending channel resistance level as well. However, if price action starts to break down below 20,390, that would invalidate today's intraday trend bullish bias to see a retest of yesterday's gap up in the Asia session. Now I think as the next near-term support level at 20,110, we also correspond very closely to the lower limit of this minor ascending channel as well. Right, so flipping to an intraday trend bullish bias on the Nasdaq 100 using 20,390 as my short-term pivotal support level. All right, so that sum up the intraday technical outlook on the major stock indices. Now let us focus our attention to the commodity class, starting with gold XAU/USD. So gold on last Friday we were neutral and it broke below our neutrality limit yesterday, which is the 3,265 level, 3265 level. And what you could see over here is that price action at this juncture over here is still rather weak. It's trading below the 20-day moving average. So there's no bullish divergence that's being seen on the hourly RSI. Price action go lower low, the hourly RSI also go lower low. So right now it's just exited from the hourly oversold region, but it still remains on a resistance level. All right, it still remains on the resistance level over here. All right, so with that, I'll be using 3291 as my short-term pivotal resistance level, which is the former minor swing low of last Friday, where it attempt to rally, and this rally can't clear above our upper limit at 3,360, and it just break through. Once it break through, there's some kind of retest on it. Then after that, it plunged down lower. So this has a significant sentiment barrier to it over here, at least in the near term, as well correspond very closely to the 20-day moving average. I think as very closely to this resistance level at 32.91 as well. So we'll be using 32.91 as my short-term pivotal resistance for gold XAU/USD. We'll flip to a intraday trend bearish bias. Next near-term support level to watch will be 31.94. A breakdown below 31.94 may expose 31.33 next, which is the one-time Fibo extension taken from the high of 22nd of April, and also correspond to the 50-day moving average, acting as a support level as well. Only a push up and hourly close above 32.91 that would invalidate today's intraday trend bearish bias to see a short-term recovery towards the 33.60, and above it may revisit 34.20/34.35. So that's for gold XAU/USD. Flipping to a intraday trend bearish bias using 32.91 as the short-term pivotal resistance level. Lastly will be the West Texas oil. So the West Texas oil, like I mentioned earlier, last Friday we have that trend bullish bias for the extension of this corrective rebound sequence, hit exactly at our resistance level at 63.80 and start to shape a bearish reaction of it. So with that, we will now flip back to a intraday trend bearish bias for West Texas oil using 63.88 as my short-term pivotal resistance level. First support level to watch will be 60.35. A breakdown below 60.35 may expose 58 figure level next. Only a push out and an hourly close above 63.88 that would invalidate today's intraday trend bearish bias to see the continuation of this corrective rebound sequence to extend to the upside, exposing the next intermediate resistance at 65.40, which is the minor swing high area of 23rd of April. Above 65.40 may see 67.35 coming in next, which is the minor swing high of 4th of April. So that sum up the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So today, during the start of the European session at 2 p.m., we have UK Tier 1 data, which is the labor market data, unemployment rate, where the consensus is expecting a slight uptick to 4.5% from 4.4% in the previous month of February. So this is a March figure. And also unemployment change for March, market participants also has to see a slight deterioration with only 120k jobs added from 206k job added over here. Then for this upcoming, for the next thing to look out for will be, okay, this UK data will be much sensitive to the sterling dollar and the sterling crosses, and as well as for those who are interested in the UK 100 CFD index. Then moving on will be Europe. We have the economic sentiment data, which considers a consumer sentiment data, they call it, for the month of May. So market participants expecting a slight an improvement from negative 18.5 that was printed in the previous month of April to improve to negative 4.4. So that will be up at 5 p.m. Singapore time. So that could influence the euro dollar, the euro crosses, and as well as the Germany 30. And onward next will be the very important US CPI data, 8:30 p.m. Singapore time, that could impact almost all the major asset classes, including gold as well. So for the core rate, inflation rate month on month for April, market expecting a slight uptick to 0.3% from 0.1%, whereas on the year-on-year basis, that's moved up seasonality factor. Core inflation rate, market is expecting no change at 2.8%. So this is still a rather sticky inflation concessions expectation as well. So that could influence the major stock indices movement, at least on the intraday basis. So that will be 8:30 p.m. Singapore time. And we do have Bank of England official Phil speaking later at 11 p.m. Singapore time, and tomorrow early Wednesday before the start of tomorrow daily dose at 7:50 a.m. we have Japan PPI, which is Japan factory gate prices. So that that data could potentially influence the dollar yen and the yen crosses. All right, so with that sum up today's daily dose of market insights. I'm Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.